porque cada vez el crecimiento es menor, pero vamos a ver qué opina Chris Williamson, Chief Business Economist at S&P Global Market Intelligence. Chris, hello, good afternoon. Thanks so much for being with us again.
Good afternoon.
US PMI dropped to 51.2 in June from 53.6 last month, reaching its lowest mark since the start of the year. We see how businesses have become much more concerned about the outlook as a result of the rising cost of living and drop in demand. Are they heralding an economic downturn? Which is your vision?
Certainly, it's looking like a downturn may be imminent in the United States. So that PMI you're referring to measures current economic activity, and that's now fallen to a rate consistent with only very modest economic growth in June, about 1% annualized, so about 0.2%. But importantly, the forward-looking indicators are even more downbeat. So inflows of new orders are now falling. Business confidence about the outlook has now deteriorated to a level that is consistent with economic contraction. So these other survey gauges that measure future output more than current are the key ones to worry about here. So they're suggesting that US GDP will very likely contract in the third quarter.
As you comment on the flash PMI data, the pace of US economic growth has slowed sharply in June. US manufacturing sector lost growth momentum in early June. How will manufacturing and services evolve?
So they're both seeing slowdown trends, but manufacturing is more severe than the service sector. The service sector in the US, as in Europe, has benefited from the reopening of the economy. So pent-up demand where consumers were unable to enjoy activities such as holidays, that tailwind to the economy is still there. But what we'd seen in terms of very strong growth of those activities in April and May has now started to fade in June. So the economy is losing that stimulus, that tailwind. Now, part of that reason is a natural one that we've had a few months of looser COVID-19 containment measures. So many people have enjoyed those activities for a couple of months. But more importantly, the rising cost of living is being reported as causing more and more customers to report that, hey, anything non-essential, we're starting to cut back on. So this is becoming very evident now in the United States and in Europe. And it's meaning that the economies are losing that stimulus, that tailwind to growth. And there's a bleaker picture of the cost of living causing demand to start falling.
And what about prices? Do you think that US have seen the peak, the price peak?
Well, yeah, this is interesting because obviously there's two driving forces behind prices. One is constrained supply. A lack of supply means that suppliers have pricing power, and the other is strong demand. So these two factors have been very important in driving inflation higher in prior months. Both of these factors are now waning. So supply delays, those constraints, they're now showing real signs of easing, partly because there's less demand around. Now, that falling demand and weaker supply means that we've got quite a significant easing of industrial raw material price pressures coming through now in June. That should in turn feed through to consumer goods prices and to some extent to the service sector. But we've got two areas where price pressures remain very intense. One, of course, is energy, most notably in Europe, but across the world. And secondly, food as well. So those are two big elements of the consumer price index in almost all countries. So those are going to probably keep inflation high. But these industrial prices that are starting to come down, that may gain further momentum. We can see today, for example, things like copper prices, with these weaker signs of economic growth reverberating through the markets. Traders are starting to price in lower commodity prices. So this is almost has a self-fulfilling element to it. You'll see these market prices continue to come down. And indeed, at the same time, we're seeing markets price in less aggressive central bank action because this inflation is causing demand destruction already. And that's doing part of the job of higher interest rates.
And today, the Eurozone economic growth deteriorated sharply as well to a 16-month low in June, according to preliminary data reflecting a stalling of demand growth as well. This is the first comment on the report today. Is the Eurozone economy close to suffering a contraction in its economic activity?
Yes, it looks like it. It's still growing at the moment, according to those PMI survey data. But again, just like the US, those forward-looking indicators are starting to look at very worrying low levels, heralding an economic contraction in the third quarter. So if we look at manufacturing, for example, new orders placed for manufacturing goods are now falling. It's the first time in 2 years that they've been falling. And a consequence of that is that in warehouse inventories of unsold stock are now also rising at the fastest rate for 2 years. This is what, in the past two years or so, this is the sort of thing that we've only been seeing when there are COVID-19 containment measures being imposed, new restrictions. But there's none of those at the moment. So what we're seeing now is the unsold stock build up in warehouses because they simply have not got the customers to buy it at the moment. Customers are refusing high prices or are simply they're struggling with the rising cost of living. So demand is coming down. We're seeing the same thing in the service sector, just as in the US. In Europe, we had this wave of growth come through as the economy reopened, and that's now fading. That wave is now, in fact, ebbing. So it's starting to go into reverse. So that consumer demand for services, which was the big stimulus to the economy, is now also fading in the service sector.
Chris Williamson, thank you so much for attending us again. Have a nice day.
Thank you very much.
Bueno, pues nos ha quedado claro la